In 2008, one bank's collapse sent the world into economic chaos. Lehman Brothers, a Wall Street titan, fell overnight, triggering the worst financial crisis since the Great Depression. How did this happen, and what can we learn? Stay tuned to find out. Welcome back to the Political Economy channel, where we unravel the forces shaping our world's economies. Today, we're diving into the bankruptcy of Lehman Brothers on September 15, 2008. A pivotal moment that shook global markets and changed finance forever. Founded in 1850 as a humble dry goods store in Montgomery, Alabama, by brothers Henry, Emmanuel, and Mayer Lehman, Lehman Brothers grew into the fourth largest investment bank in the U.S. By 2008, with over $600 billion in assets and 25,000 employees worldwide. From cotton trading to underwriting major public offerings, Lehman was a financial powerhouse. But beneath this success lay a fatal flaw: an aggressive bet on risky subprime mortgages. In this video, we'll explore how Lehman's collapse sparked the global financial crisis, its devastating aftermath, and the lessons that reshaped our financial systems. If you're new here, hit that subscribe button to join our community of curious minds. The subprime mortgage crisis. To understand Lehman's downfall, we need to look at the subprime mortgage crisis, the ticking time bomb that exploded in 2008. Subprime mortgages are loans given to borrowers with poor credit, often with adjustable interest rates that rise over time, making repayment harder. In the early 2000s, a housing boom fueled by low interest rates led banks to issue these risky loans en masse. These loans were bundled into mortgage-backed securities, or MBS, and sold to investors, promising high returns. Lehman Brothers dove headfirst into this market. In 1997, they acquired Aurora Loan Services, an Alt-A lender, and in 2000, BNC Mortgage, a subprime lender. By 2006, these subsidiaries were originating nearly $50 billion in loans monthly. Lehman's balance sheet ballooned to $680 billion in assets by 2008, but with only $22.5 billion in capital, they were dangerously overleveraged, with a ratio of 31-1. When the housing bubble burst in 2007, home prices plummeted and borrowers defaulted. The value of Lehman's MBS crashed, leading to massive losses. In the second quarter of 2008, Lehman reported a $2.8 billion loss, its first as a public company, shaking investor confidence. Events leading to bankruptcy. Subprime crisis deepened, Lehman's troubles mounted. The stock plummeted 73% in early 2008, causing clients to withdraw funds. In August, Lehman laid off 1,500 employees, but this wasn't enough. Desperate to survive, CEO Dick Fuld sought buyers. Bank of America and Barclays showed interest, but both deals collapsed. Bank of America chose to acquire Merrill Lynch, while Barclays faced regulatory hurdles from the UK's Financial Services Authority. The US government, led by Treasury Secretary Henry Paulson and Federal Reserve Chairman Ben Bernanke, faced a tough choice. Unlike Bear Stearns, which was bailed out earlier in 2008, Lehman was deemed to lack sufficient collateral for a Federal Reserve loan. Some argue the government wanted to avoid moral hazard by not bailing out every failing bank, though this decision remains controversial. Over the weekend of September 13 to 14, frantic meetings with major banks failed to secure a rescue. On September 15, 2008, Lehman filed for Chapter 11 bankruptcy, the largest in U.S. history, with $613 billion in debt and $639 billion in assets. Employees left their offices with boxes in hand, a somber symbol of the end of an era. Lehman's collapse sent shockwaves through global markets. On September 15, 2008, the Dow Jones Industrial Average plummeted 500 points, its worst drop since 9/11. A week later, on September 29th, it fell a whopping 777 points, the largest single-day drop in history at the time. The bankruptcy triggered a crisis of confidence, freezing credit markets as banks stopped lending. Money market funds faced massive withdrawals, with investors pulling a record $196 billion. This threatened everyday businesses, from grocery stores to shippers who relied on short-term loans. The crisis spread globally, with Japan reporting $2.4 billion in losses and Hong Kong investors losing billions in Lehman-linked derivatives. Fearing a total financial collapse, the U.S. government acted swiftly. On September 16th, the Federal Reserve loaned $85 billion to AIG, and soon after, Congress passed the $700 billion Troubled Asset Relief Program, or TARP, to stabilize banks. As Ben Bernanke later said, the failure of Lehman Brothers demonstrated that liquidity provision by the Federal Reserve would not be sufficient to stop the crisis. Substantial fiscal resources were necessary. The world plunged into the Great Recession, with millions losing jobs and homes. The Lehman collapse exposed the fragility of the global financial system, prompting major reforms. In 2010, the U.S. Congress passed the Dodd-Frank Wall Street Reform and Consumer Protection Act, a sweeping law to prevent another crisis. It created the Consumer Financial Protection Bureau to shield consumers from predatory lending, introduced the Volcker Rule to limit banks' speculative trading, and enhanced oversight of systemically important institutions. While Dodd-Frank has strengthened financial stability, critics argue it burdens smaller banks or fails to address all risks. The crisis also highlighted the dangers of excessive leverage and complex financial products like mortgage-backed securities. Globally, it led to tighter regulations and a re-evaluation of too-big-to-fail policies, though debates continue about their effectiveness. The bankruptcy of Lehman Brothers was more than a corporate failure. It was a wake-up call about the risks of unchecked financial practices. It showed how interconnected our global economy is and the devastating impact when trust collapses. What do you think? Could another crisis like this happen today? Share your thoughts in the comments below. If this deep dive into the Lehman collapse resonated with you, give it a thumbs up, share it with a friend, and subscribe for more stories on the forces shaping our economy. Check out our video on the South Sea Bubble for another tale of financial folly. Thanks for watching, and I'll see you in the next one.
Do you like to dig deeper? Political economy is full of powerful ideas. You're right in the thick of it. Insightful, thought-provoking, expanding every step of the way. From Adam Smith and the rise of capitalism to Marx's bold critique, mercantilism, Keynesian economics, neoliberalism, and more. Or we explore it all, clearly and from every angle. Keep the momentum going. Check the links, dive deeper, and subscribe for more.